Good morning, everyone, and welcome to the European crossover webinar. And we did have the State of the Union, and we mentioned yesterday, I thought that things would start clipping along right afterwards, and it happened, I mean, a little bit during the meeting and a little bit, not meeting, but speech, and a little bit afterwards, and we saw some movement here. And starting off with that, we saw the dollar yen going in pair back, and then it'd be nice if we went to the dollar yen. Hang on, here we go. And we've actually gone and paired back right in here. So coming into a little bit of support right there. Oh, you can actually push it a little bit lower, just about 55. And we've just about made that low here after we took the dip right here and slid back, rallied back into, you can see this resistance right here into the 82s. Actually, I posted there, I got short. Blake had already taken advantage of a pretty good little rundown here, and I was just watching as it fell down, and I think a couple of people actually joined him already at that time and jumped out. I know Blake got out on I think it was a third of his position. We rallied back, and I used that opportunity to get short myself. And we did see the euro corner and take a dip, and we'll go in and quickly just move into the news. But we did the analysis and posted that in the room. We came right into that area here, put the euro succumb to the pressure with the European Economic Report sliding backwards. Support comes in at 1380, followed by 1354. Well, the 1380, that's right where we took a run to here. You can see here on the euro, we've made this run right here, right down to this 1380, and let's point that here. You can see that's our pivot right there, 1380. So we just jumped down here at 1380, rallying up about 14 pips off of that. But we'll go into the others. But let's just go in and quickly take a quick move here into the news. As I mentioned, we keep it pretty light, and the news is actually pretty light this morning anyway. But and also one of the things that we were concerned, and we'll mention that here in the news, why I thought the euro could continue once it's lost that 1426, it continued that slide, despite what we're seeing with the State of the Union. But we'll go on and move into the news now. Sterling will gain up to 5% if Britain parts ways with the European Union with a divorce deal that will slide between 5 and 10% in the event of a disorderly Brexit, a Reuters poll found on Wednesday. As one market player put it, the rationale is to wait right up until the last possible moment to sell off in the hopes of a last-minute breakthrough. The latest crunch moment is PM Theresa May's trip to Brussels tomorrow to seek changes to the Brexit deal rejected by Parliament. Before that, she will meet with DUP leader Arlene Foster in Belfast today, with Ireland's Leo Varadkar will himself go to Brussels to reemphasize Dublin's veto to any watering down of the Irish border backstop. Fresh from the agreeing to resolving a decades-old name dispute with Macedonia, which as a result will be signed in its NATO accession protocol today, Greece's Alexis Tsipras is out to improve ties with Turkey. He's playing a symbolic visit to Istanbul's former cathedral, Hagia Sophia, today as he talks with Tayyip Erdogan yesterday, that ended up with a call to resolve through dialogue with the two countries' feuds over territory. Cyprus and energy, however, he pushed back to Erdogan's call to help repatriate 8 soldiers who fled to Greece. Industrial orders are notoriously volatile. It only takes a couple of big items to skew the numbers, but the unexpected drop in contracts made in Germany goods announced this morning will add to concerns about the euro's leading economy. They fell 1.6% compared with the expectations of a 0.3% rise. So once again, you keep seeing this, weakening. As I mentioned before, yesterday, it's like, when the glass is half empty, then, or you're looking from a negative connotation, just seems like bad news accentuates lower prices, and certainly we saw that today or this morning as we saw the euro make that track down to 1380, which we mentioned here is the pivot we had in our Asian analysis. I made sure I got the Asian analysis done for most of all the pairs before we got into the State of the Union. Let's go on and finish back up here in the morning markets. Australia's central bank is the latest to signal policy easing in the face of a global economic headwinds, having signaled a move to a tighter policy for almost a year. The bank's governor, Philip Lowe, now says rates could go either way. That's knocked the Australian down 1% lower. It's perhaps not surprising given the Australia's exposure to slowing China. I know Blake made a reference here. He was saying that, in time Australia's going to come into be the worser of all for the eventually what they expect is a better trade deal or resolving these tiffs with China. But anyway, what's more, President Trump's combative State of the Union somewhat cast a pall on markets as he disclosed on no new infrastructure initiatives and instead raised the prospect of another shutdown should financing of a border will not be forthcoming. World stocks have stalled near 2-month highs with holiday-thinned Asia off to a lackluster start. Europe opening flat to weaker in Wall Street futures, likewise flattish. Clearly, another catalyst is needed for further gains in the United States anyway. Earnings are still looking pretty good. Consumer giants such as Estee Lauder and Ralph Lauren lifted Wall Street last night, while Alphabet, also known as Google, also posted better than expected profits, helping the New York Tech index back to 2-month highs. But Europe's another story altogether, with analysts continuing to cut their expectations for the fourth quarter. Data mostly everywhere is also disappointing. The latest being the relative weak U.S. service sector that pushed bond yields down and convinced market players that the Fed would retain its dovish stance. U.S. bond markets were also helped by solid demand at an auction of 3-year notes, which saw the lowest price yield since April. Later today, U.S. industrial earnings are due. General Motors and Goodyear Tire. And moving on to the currency markets, focus has been on the course of the Australian dollar's 1% fall. The other eye-catching currency is sterling, which slumped below 130 yesterday, looking at a dreadful set of service sector data. And let's see, the dollar climbed for a 5th straight session and spells trouble for emerging market currencies, especially high yielders. South African rand is down 0.5%, while Turkey's lira and Mexico peso are down 0.3%. And let's go on and move in to the dollar settles near a 2-week high. Both Federal Reserve and Central Bank have signaled a cautious monetary outlook, and markets are becoming increasingly sensitive to the outlook for monetary policy and any shifts of changes that trigger larger moves, said Tan Luan, Forex strategy at Commerce Bank. And then referring on to the Australian dollar, we referenced about the central bank, and we'll get to the analysis on the Aussie dollar. Seeing the pound remained on the back foot following a slump overnight. The currency was a shade lower at 129.30. Sterling had lost 0.7% on Tuesday on a weak purchasing managers index data and uncertainty about Brexit talks. Now, one of the things we had mentioned yesterday where I thought the euro could still may sustain a weaker down move was that we saw a lot of paper coming in this week, and certainly today's Italy 30-year bond yield hits 3-week high before debt issue. The Italian government bond yields rose across the curve before a 30-year syndicated debt issue is widely expected to be launched later on Wednesday. Italy's Treasury said on Tuesday it hired Banca, BNP Paribas, Credit Agricole, and Deutsche Bank, and Goldman Sachs to issue a new 30-year bond via syndicated deal. The yield on Italy's outstanding 30-year bonds hit a 3-week high at 3.687. Wow, up 3 basis points on the day. And lastly, we'll just take a look at gold. Gold prices held firm on Wednesday after President Trump said in his State of the Union he vowed to build a border wall and gave little clarity over the ongoing trade discussions with China, with the bullion's gains offset by a firmer dollar. And actually, gold's holding up relatively well when you see how, the dollar index, we're above that key 96.07 right now, and we'll go on and get to that. But Trump spoke in the chamber of the House of Representatives, facing political discord over his demands that Democrats in their opposition to funding for a border wall, he says, needed to stem illegal immigration and smuggled drugs. There's likely risk of another government shutdown with President Trump still sticking to the rhetoric of erecting a border wall. Market participants remain cognizant of the fact that global market macro numbers are slowing, and gold as an investment avenue remains very much in the reckoning. Trump's demand for $5.7 billion in funding of a U.S. border wall triggered a historic 35-day partial government shutdown. Meanwhile, Fed President Robert Kaplan said on Tuesday he thought the Fed should leave interest rates where they are. U.S. central banks last week promised to be patient. While Trump's address did not have anything specific on the China trade front, senior U.S. and China officials are poised to start another round of talks in Beijing next week, according to sources. Trump has vowed to increase tariffs on $200 billion worth of Chinese imports to 25% from 10%. For a very short term, the narrowing of a trade range in gold is possible because the better than expected U.S. non-farm payrolls make it less likely for the Fed to be accommodative. And let's go on and move on to that. As I mentioned, we're going to start off with the euro. Looking on to our analysis, we posted this analysis before the State of the Union just to go and have some figures in there. And as I mentioned, we were looking here on the euro. We had mentioned that support comes in at 1380, followed by this 2 hours at the 1354. Well, we'll take a look where we are right now with the euro. And that 1380 right here, if you look on the 2-hour chart, seems to hold up real well. This is a pivot. The chance was if we made it down here, which is at 54. That's if the wheels came off the caboose. Well, for now, we're going to stick with this 1380, this pivot, and we'll see whether the dollar, which is above a key 96.07, whether it can retain that. But for now, we'll stay with this 1380. We know that 1426 was very important there and allowed this market to let go of those gains. And as I mentioned, with the amount of debt issuance coming this week, that was certainly going to weigh on the euro. And this has really made it tough for bulls too. I mean, at this point, I think now today's a day of where we're going to kind of look and see where the dollar holds its own here. Once again, the euro, the economic figures continue to be weak. We just mentioned about the German numbers. So really the opportunities for it to continue to stay weak, the key would be whether the dollar fizzles a bit, but we shall see. We're going to take a look at resistance. And when you remember the 1445 was that big breakout area, and that's what it would take for us to try and get back up again. But let's take a look at where we stand right now. Certainly we certainly have that momentum. You can see that clearly here with the exponential moving averages. For right now, resistance is going to come in at 1429. Remember, 1429 was that bias support we had the other day, a couple of days ago, which the market held. I think it went down to, which was that key daily close, which was 1426. We saw a bounce. We got up to about, I think it was like 1441 in Asia, and then we rolled down the hill. So it's going to be 1429 for resistance on the euro for today. We can see here on a very, very short-term basis, and we don't use exponential moving averages for the 5-minute. So we'll shift it right now into the 30-minute. There we go. And we can see, you can see right here with this 30-minute exponential moving averages, bears still remain, the momentum remains lower. You can see right there, 1429. There's a resistance coming in right there, that nib. And moving into cable. Cable's downside target is 28.89, confluence with 28.95 to 38%, with upside resistance at 30.18. So we'll take a look at where we're here on the cable, and we haven't quite made it up here to the 28.89. We're going to actually look at it. You can see here on the daily, but let's go on and we were here the other day. Remember a couple days back, and we were just holding here at this 30.62. Actually, when we were doing the the European crossover webinar. And we see if we break here, then we'll certainly make that push lower. We actually held up. The market didn't, when we made that track down here to remember the 23%, it didn't really hold the market, and that's why the target's open here to 28.95, and there's some additional support level there, which would appear that that would be the area that the market would want to target now. Remember, 3018 was at 23%, but we went through that without much of a pullback or anything. So that opens the door for us to come down here to 28.95. That's confluencing here with 28.89, and that's where we would be looking for a target area for this eventually to come down here. So 28.89, let's push this here. There we go. So that's what we're looking for, is 28.89, which is confluence with the 38%. 3018 right here, remember, that was at 23%. And initially, I think it was like, I think it was on, if it was Tuesday or Monday, we had that. Oh, I think it may have been Monday. We had that as a support area, but it didn't really hold the market. I mean, if you think about the 23%, not even a bit of a bounce, it just kind of held there and just rolled back down. Really opens the door for the next key support being the 38%, and that's confluencing right here with this level support here at 28.89. And the upside, you can see, was that same area here, which didn't even hold the market. You can look at here, we had a nice little area of support here. The market just kind of came down there, kind of just held, no balance at all, and then just rolled lower. Well, that's actually going to be our resistance, which is going to be 3018. And we've really weakened here on the Aussie dollar. We'll take a look here, same thing on the Asia analysis. Aussie resistance is 72.76, which is the 38%. The latest run-up is primarily on short covering. Downside target comes in at 71.80, and that was the initial. Well, we've already pushed past that. And actually, before the State of the Union, we were already pushing lower. The reason I was saying that here is that it was all on short covering, or mostly on short covering. Remember, we took that dip here, and then the thought was, well, wait a minute. They're not as bearish as or as dovish as we thought. And then we saw that run up here. Well, here's the resistance. That's the 72.76. This was ahead of the State of the Union. And we had this area right here, which also confluence. They both were the same level. 72.76 had to be the 38% of this entire move. Well, we made this run up in here, but that was my thought, is this is just on short covering. So the weakest form of buying is always going to be short covering, because you're just covering your shorts. It's not new fuel. It's just basically just getting the heck out of Dodge and covering those shorts. So the door was open for us to move lower, and move lower we did. Now we came down here to the 71.80 here, and there's some additional support around the 67-ish right here. That actually, when we did this for the beginning of the week, we were saying, hey, we think we can make it eventually. We'll see. 72 would be some good support. Initially it was. Remember, this is where that held here. But think of what we had listed, 72.04. We said you should see some good buying at 71.66. Well, the 66 actually during the State of the Union actually held to the pip, and then we worked a little bit hard, but really the worm had turned at that point, because boy, did we already fall. So at that point we saw a brief respite from the 71.66. I think we may have rallied not even much, maybe about 14 pips or something from that 71.66, and you can see now the market continues to slide back, which is probably adding some fuel here for the cash dollar index. So where would we see support now? Let's pull this back. Well, right here at the 78%. And if you look at that, you got a little bit of support coming in right there. So it's going to be 71.18 and actually 71.23. They're holding at this 78%. So good little area of support here. We'll go with 71.18, but the 71.23, you can see that is the 78% of this most recent range right in here. Just took us down from 70.76 on up to the highs here, 72.95. So we'll go 71.17. You can see that right there. Resistance coming in at 72.01. I'm not so sure it'll make it up that high. We'll go right here at 71.86 for resistance, a good 60 pips away. And certainly on a short-term basis, we have now moved into a bearish mode. As mentioned, the worm had turned, and that's why I was concerned with this rally back here, is that that's the weakest form of buying is going to be short covering. So the market just, I don't want to say it got caught flat-footed, but when they saw that and they said, you know what, they're not as dovish as we expected, and they turn around and race back up here, and that's what we're saying here in the Asia analysis. There's your resistance. It's going to have a tough time trying to get beyond that. And we had already started to pair back, but then, like I said, boy, did we follow. We fell pretty hard here. Well, dollar Swissy just kind of holding its own here. If you look here, we came right into resistance. We had the resistance from yesterday with par 22, and that's exactly where we went to. You see that right there, par 22. That's your resistance, but we're still holding up very well here. You know what? Until it's broken, I mean, you can make the case, well, there's a little bit higher here. That's if the dollar, launches. For right now, until it's broken, it hasn't been broken. So it's going to stay here at par 22 on the dollar Swiss. Well, see, I think today's an important day for the dollar in the sense to, do we retain these gains here? And I think that's going to be critical. We already talked about the 96.07 on a daily close. We didn't close it. Actually, we closed right, I believe it was right at 96.07. It's going to be important where we can hold this today. Obviously, the Aussie weakening and certainly aiding and abetting the dollar index. Let's go and take a look as far as support we had for the dollar Swissy. Was it 99.70? Well, that'd be if we do go on and see a decent little pullback. Right now, we're holding up very, very well. For right now, that's going to be support here, which is a 98.70. If we do rotate from lower here, that's where they would go and target, which would be this 98.70. Let's take a look at this on a closer to our look. So there's that run up there to par. Actually, maybe par 21. So just one pip off of that. There's the 99.70, and that's what we'd be looking for. If we were to rotate lower. You can see we've got a nice little hammer here. Once if we broke it, then this isn't a long ways off, but that's initially, I think, where they would go on and target move to if we're going to see a little bit of a pullback, which we're going to go and keep that the same here. 99.70. Let's go and get moving on to the dollar CAD. Well, the dollar CAD hasn't changed a whole lot, and actually, a good thing. I mean, change other than what now we're starting to see a move here. And going into the Asian analysis, we were saying that, there's no change. Into that, now we've seen the dollar CAD going to react strongly back here. So we came in and said no change in the dollar CAD after holding weekly support at 30.89. Initial upside resistance, that is 30.52 with volume support coming in at 30.43. Well, the dollar CAD has done a very good job of holding here at what we started out the week pointing out was key weekly support. We'll take a look at that. You can see right here that 30.89 has so far held. We've actually made a nice little rally today. This is certainly helping the dollar index. So we got past that 31.52 area here, and let's see how far we can look to crawl back. This market held its own at those key support area, and it didn't just quickly bounce. It stayed down there for a while. So we built up a little bit of a, I won't say a range, but probably a good little area of support where the market wasn't able to take it, which opens the door then. You can see this whole area here where the market had the opportunity to slide down. There was key weekly support, but it didn't. So the ability to pop up really opens that door higher then. And how we've gone. Now we got past that 31.52. We've even come back past here at 31.85, the 38% market pushed all the way up to 32. The support, the resistance is going to come in. Oh, you can even make the case right 32.02 to, let's go right there, 32.06. 32.06. So not very far away. The 50% would be 32.14. So they've already blasted past this 38%. So when you see that, that really opens the door for them to even challenge eventually up here to 32.14, the 50%. And I guess that's what we're going to go with. The 32, actually it's going to be 32.21. Let's just go right there and split the difference. We'll call it 32.16. 32.16. So we're really seeing a little bit of a push here. And if the dollar can make that push higher, that's where they're going to go and want to take a run to. We'll go at 32.16, just a hair below the 50%. Still very bearish, and you would look for the market likely to go and try and sell into this. Support, well, support's going to be which way was resistance initially. You see that coming across? 31.52. That's going to be resistance now. I mean, not resistance, but support. And let's take a look at crude. We saw a nice little pop back here in crude. Look at that, after rolling back, and we rolled back. If you saw this went right to the pip, which at the time was a 38% here. Take a look at this. Not the pip, I should say, but to the tick, right to the tick at the 38%. And then from there, we've kind of eased back. We saw a little bit of a pop back, though, after the initial pullback, and now kind of rotating back as oil wasn't quite ready to go on and give up the ghost. Saw this, and now we'd worked lower. So on the resistance, we had 55.04, and the high was, well, not bad, 55.06. And let's see, resistance today is going to be right here. You can see it coming in. I don't know if we'll make it up that high. That's a pretty good little run if it did, 55.24, especially after things have rotated lower. It's going to be coming in right there, which is 54.01. That's still a long ways off, but we're pretty oversold. So we're going to go with that. We know that this market, look at this. You saw this run. We quickly went back to new highs, came up to, this was going into the week. Remember, we made it in here to the 55.60 and then rotated quite out and sold off quite a bit. Rallied right back up if we caught people napping, and then we just hung here, and finally you can see this complete bearish dark cloud cover here engulfing the prior body, and that really opened the door for the market to move lower. Where we came down here in an area of volume support. You can see that here, 53.49. We had the 54.12 after that run up, which was really, if you look at the 54.12, the market tried to hold a close in here, and then we rotated lower. We're pretty close to support here after this pullback. I think after this whipsaw, you probably have a little bit of short covering coming here. People are a little bit concerned to jump in, but I'll tell you what, with the overall global economy slowing down, it seems like day by day, I don't even see what the heck it's had this kind of a rally. So I tell you what, looking from a little bit longer term, not longer term, or medium term, we're going to go with this 52.50 as an area for them to make a move, which will still be another 57 cents away, but we'll go with 52.50. I think we're going to have to make a trek down to that area before we can see a little bit more buying. Resistance now is going to be right there, 54.01. That's still a heck of a pullback, but we'll go with 54.01 for resistance. There's even a case to be made right here. We'll slide it right there at 53.85. That's not a whole lot lower, but you can see coming in right across here, 53.85. And it's just above this high right here. So it's going to be 53.85. Still remains bullish. So let's go move on now to the dollar yen. The dollar yen maintains the upside bias after the daily close above 976. The upside resistance is 1039. The market will need to close below 976 to neutralize the upside. Well, we have now since lost at 976. We actually dipped below the 976 during the State of the Union. You can see the importance of 977. This, folks, is what opened the door for us to move higher at the start of the week, because once you got this close above 977, it gave that upside boost. And you can see here, continued here, obviously on Monday, Tuesday, we tried to push a little bit higher here during the State of the Union, and we quickly started to lose some gas here. But that was the key importance of that 977. Look at it from here. There you go. You see that 977? When we closed above there, that opened the door for us to challenge higher, and challenge higher we did, which was 1015. And really, it's just a matter of the technicals, because once you close above that, then the shorts have got to throw in the towel. Now, whether they come back, that's a different thing, which apparently they, was the market struggled above 110. Shorts were quick to, start to come back in again. There was nothing that was ground changing in that State of the Union, so it allowed the dollar yen to go on and pair back. Well, as I said, the key is now 976 again on this side. On this case, the downside, we would need that close below 976 to neutralize the upside. It doesn't turn it bearish, so let's be clear about that, because we have been able to close above this pivot of 927, but it neutralizes on a short term the upside. So when we look on here with the dollar yen, we're just trading in this range here, basically going from 984 above that 976, and then vacillating between there and the upper area close to around 10. Well, we since rolled back after that, and I think the door's open. And when you look at this on let's take a look at on a 30-minute for the exponential moving average. The market has now shifted into a sell mode here. Saw this pullback, and now we start to edge back. Resistance now is going to come in right there at 980, 982 on resistance for the dollar yen. And it's certainly still bullish. Certainly, as long as we've held above that 927 pivot. Now we had our support here at 965. And this, if you look down here, that's exactly where they went down to. They actually went down to 963 before we saw a pair back up in here to the upper 980s. We started to rotate a little bit lower again. Support right now is going to come in right there. There's some intermediate support right here. You can see there at 956, and that's exactly where they just went to. But looking a little bit lower, it's going to come in right there at 945. 945. Well, we're finally seeing the pullback here in this Aussie yen. Now, the S&Ps themselves are still holding up relatively well, but we are seeing this divergence. We were talking about that yesterday. We are seeing a bit of divergence here as we're not mirroring up to the S&Ps that we're trying to push a little bit higher. Now, they're not as, they've worked a little bit lower, but they're still way up here in the stratosphere. But the Aussie yen, you can see it here, is rotating lower here. We look on here, we've had already a pretty decent little pullback here. And we talked about that 79.80 yesterday. Let's see. There was our resistance at 79.80. And we got up as high as, well, 79.84. I think we just nicked that at the time. And I said, you know what, 79.80 is still 79.80. We're going to hold that. And we've since paired back. And boy, we've seen a pretty good little pullback here. We had our support, and I don't know why I put this as 79.23. I meant to put 78.23 or actually 79.23. Yeah, let me take a look here. Yeah, we were actually holding. So this same market has really paired quite a bit back. Look all the way down to 78.19. Wow, we have seen a very good pullback, and this is actually a good support level in here. You can make the case just a hair bit lower, 78.12. But we have really come off quite a bit. So we did blast through between that 79.12 and continue to move lower here. So this is very good support coming in right there. We'll call it 78.12. And now the fortunes have changed now for this. If we do get a little bit of a snap rally, we'll go right there with that. 78.82 for resistance. And let's go move into the cash dollar index. Okay, the dollar index has reached the 96.07 closing basis, and we talked about that, but we were just sitting right there on it at the time. Tonight is the State of the Union. Well, I did the analysis, complete all this analysis before the State of the Union in preparation, so we'd be ready for these levels. A daily close above 96.07 will have the bulls back in control. Key upside resistance on the 2-hour is 96.33. Support comes in at 95.79. So let's take a look. Well, here's that 96.07, and now we've been talking about this all week long here, and would be key if we were to close. Well, we didn't close; we closed right at it yesterday. The key, that's why I think today is very, very important to see what we're going to do now. We're above it, but where's our key resistance? Well, that's what we're taking a look at here on the 2-hour chart, and we're saying it comes in right there, 96.33, coming right across here. Let's go on in. That's going to be key right there. Now, I don't know. As I said, we're above the 96.07. We're not doing a whole lot with it, but we still are holding it. Certainly the Australian dollar weakening is aiding to that support, as is the Canadian dollar. This is the key resistance here, but there's no denying we're above the 96.07. If we close there, that's, like I said, that's what I think today is pivotal. Pivotal in the sense that you can't deny where the dollar index is right now, but pivotal in the sense of essentially solidifying, hey, bulls are in control. So it's something you're going to want to take a look at. But we're not, the only thing that is a bit, I won't say a concern, but a bit of a caution flag is if we're above this 96.07, and that's key. Why isn't this market stretching for all it's worth, which is up here at 96.34? So we'll have the resistance here at 96.34. That 96.07 is huge on the daily, and certainly something you want to keep an eye on throughout the day. I'm surprised, though, that the dollar index isn't pushing up at this 96.34 area here. If you think about where the euro's already at, the Aussie dollar is giving ground quite a bit, the Canadian dollar, and it's just interesting here. Just something you want to keep an eye on here. Now for support, well, we're up in here, so support would definitely have to move higher. For right now, that would come in at 95.91 on a short term. Well, let's work it just a little bit lower. It's going to be 95.85. But this is the area right in here. That's also the pivot here. Remember that that's been so important here, that 96.08, and now a strong close area here. Remember when the market was just languishing that entire week? Now that's an exceptional, not exceptional, but a very important closing level. And interesting, like I said, when you think about the Aussie dollar, you think about the Canadian dollar, the yen is also paring back a bit. You would think, and the euro could be a lot lower. You would think that we'd be pushing up in here in this area. So it's interesting. It's going to be interesting to see if we're able to, if we slide back a little bit here. Let's go and move into the gold market. Gold's still holding its own here. And surprisingly, it's even, when you think about the way the dollar index is up here at 98.607, you're thinking, what the heck is gold still doing up in here? You think you'd see a bigger pullback from this area here, and we just simply haven't seen it at this point. There's concerns because of Trump talking about the wall and the government shut down, but gold just doesn't seem to really want to pull back very much. Now, I think that we still have the opportunity to come down at 13.4, but I'll tell you what, I think we should even be lower here. Even I thought, as much as I was thinking, hey, we got these targets, we were holding up so well, didn't want to believe too much about those that were getting bearish gold, and kept thinking, well, we're holding up so well, even if we see a bit of a pullback, we're going to see a heck of a lot of demand. And we did, and then we came up here, I was thinking, okay, well, market's now not going to be satisfied with 1304. We're going to blast, and we're going to take us to 1323, with 1322 being the 78%. Now I would say, okay, we start out the week saying, okay, a respite is due. We can see a pullback to 1304. I think that's what we'll come to. We did have initial resistance or support at 1307. Market bottomed at 1308. We moved higher. 1315 has been our resistance area now, but I'm surprised at the sustainability of gold. We're still going to go and keep this 1304. Don't want to change that. I think that the market could be caught a little bit flat-footed maybe, and we could easily gun our stops down here. And that's not even that far if you think about it. And a decent little, I wouldn't even call it a healthy pullback, because it's, probably a healthy pullback would be taking us down towards the 1288. This is just barely just a reasonable pullback. So I don't think it's asking too much at 1304. Now, 1315, I still consider that to go and be our resistance, although we've held okay above it. You see right here. But I like this 1315. I think that, once again, the market might be a little bit tired here. If we're looking on a 30-minute, we're probably just dancing around doing a whole lot of nothing. And that is the case. Just kind of moving back and forth within about a couple of dollar range. No real significance. So on the gold market, I still like this 1315 right here for our resistance. With that, we're going to move into the bunds. And we are moving higher. I mean, we got the German data, which was not good. You can see right here on the industrial orders drop unexpectedly in December. And look at that. The prior was minus 0.2. They were expecting a positive turnaround to 0.3. And look at this. I'm surprised that the euro is not even weaker. But certainly that has, resulted in an even stronger bid here in the bunds. You see that? We're pulling back from that. But, this data keeps coming out of Europe, just keeps coming out worse and worse and worse. I see on the resistance here on the bunds, we had 64.96. Well, we blew right through that with this poor German data. Let's take a look at this on a 2-hour. Well, that's going to be the resistance right there at 65.39. But this poor German data has really put a little bit of a nice bid under the bunds now. You would think that going forward, people are going to start discounting that data and looking for the data to come on the weak side, if not a surprise to the weak side, looking out going forward. When we look at the support now, and the trading that we have is all very, very short-term oriented. So we're looking at the fib, same thing. We're just looking at the most recent range here. Now the data was probably, that's going to be pushed as high as we see for the day. We're at the 23%, but we've got the 38% comes in at 65.15. On a very short-term basis, like it right here at 65.17. 65.17 right there coming across for the bunds for support. Well, we did keep this upside that we've talked about. I think we had that as our resistance, and we had 11,355 as resistance, and we did make it up as high as 11,389, and we've actually come back a bit here. Let's go and take a look at this on, well, that's on a daily. Let's go look on here on the 2-hour chart. There we go. So we had 11,358 as our resistance. You can see the market was struggling, but it's still up at these upper levels. And we talked about this. This was even a bit of a surprise. I was thinking we would have seen this market rotate a little bit lower. Obviously, the U.S. equities were keeping this market on the upside. Now, we did struggle here at this 358 area here that we had as our resistance. We've now since moved down here to 11,314. Resistance, we're going to keep it the same, 11,358. I don't see any need to change. Support, though, I like this right here on the 38%. This is 11,258. We're actually going to give it just a little bit higher. We're going to call it 11,265. And this is initial support because maybe we'll start to see these U.S. equities, which I think from here going out, I think we can start to pare back here. But for today, the support we're going to have is right there, 11,265, just above the 38%. The key, once again, I think you need to focus on is this cash dollar index and whether we can stay above this this 9607. And the key on this 9607, you really have to look at the daily. You can see the significance of that. Now, certainly it looks like it would be able to hold in light of where you've seen the Aussie dollar, the Canadian dollar, even the yen paring back against the dollar. I should be saying strengthening, but anyway, but you know what I mean as far as the dollar yen paring back from those highs, dollar CAD moving higher, Aussie dollar. So you would think that we'd be able to hold this. My concern is, like I said, I'm a little bit thinking why this hasn't made this run to 96.33. You can see right there the 33. But we are still above the 9607, so that's what you want to keep in mind. Also, when it comes to the euro, we talked about the pivot. We did that in the Asian analysis, that 1380. That's going to be support. We did see a potential all the way down to 54, but for right now, that's going to be the support here. And that's going to go on and close us out here for the European crossover. Good luck trading. I'll go and get this posted in the room. And have a good day.